It is time now for Money Power Politics. The Dow surged more than 630 points after President Trump announced the United States would delay further strikes on Iran's energy infrastructure amid what he called, quote, very good talks with Tehran. But of course, Iran has publicly denied any negotiations were taking place. The president's announcement arrived just 15 minutes after a sharp jump in volume across both the S&P and oil futures, a burst in activity with no obvious trigger. Now, I'm not drawing any conclusions, but that certainly seems strange. So let's discuss. My friend Justin Wolfers joins me now. He is a professor of economics and public policy at the University of Michigan. And I want to welcome Stephanie Link for the very first time to the 11th hour. She's Chief Investment Officer at Hightower. You probably recognize her from CNBC's Halftime Report and Squawk Box. Stephanie, welcome to the show. We're going to start with the hardest question for you. There is no clear evidence connecting the president's announcement to that sudden volume spike. But this is a very odd pattern. What can you tell us?
Well, it is great to be here, Stephanie. Thank you so much for the invitation. Look, I think we all kind of thought this day was going to be different. When we started off the day, the futures were down 500, at least when I woke up. And then about 6:30, then all of a sudden the futures rallied pretty strongly. And then we got the tweet, or then we got the Truth Social post. This is what we've come to get used to with this administration. We have to wake up and we have to look at Twitter and we have to look at Truth Social first. And I will say, headed in, though, we were very oversold. And the sentiment was very negative. So I look at this thing called Fear and Greed Index. It comes out every day and it just gives you a number. And the number 0 is really extreme pessimism. 100 is the most optimistic you can possibly be. So we entered today at 17. And just to put that into context for you, that last year, Liberation Day, we got to 3. And COVID, we got to 12. So we're on that scale of really negative sentiment. And over the weekend, we were hearing all kinds of reports that this war is going to go on much longer than expected. And that's the thing the market is trying to grapple with, really, that if the longer it goes, can the economy hang in there? Because right now, the economy is actually pretty good at 2.5% growth. But the longer this goes, the higher oil prices, the higher commodity prices, it's not great. So the fact that it could have possibly be that it's a little bit less, that's what it rallied
But of course, the spike in volume came before the president's announcement. So even if you read the president's Truth Social post, even if you read Twitter, it didn't matter. There was a spike 15 minutes before. Justin, markets were looking at another day of potential losses before the president's post. He makes the announcement, boom, oil drops, stock prices climb. What is your take? Because even if I was Encyclopedia Brown reading every single tweet, I wouldn't be ahead of the market like all those other folks were.
I just love the Encyclopedia Brown reference. That takes me back, mate. And you get to the last page and you find out who done it. And it should have been in front of you the whole time. Wow, my kid's reading that. You know, actually, almost every time one of these big events happens, in fact, there was talk of this before 9/11 as well, some smarty finds somewhere where there's a little bit too much volume and we start to tell these stories. I tend to be a little bit cynical about them, actually, Steph, because there are so many different ways and so many different places we could look. For instance, this one happened 15 minutes before the tweet. Well, what's the right window to be looking? Is it 5 minutes before, 30 minutes before? You know, if I was the president's son-in-law, I'd probably do it the night before. And so the thing is, there are so many places to look for mischief. It's fairly easy to see it even when maybe it's not there. I'm not defending anyone in the White House. I'm just saying statistically it's very difficult to pick up what's unusual versus the usual ups and downs of finance.
Mm-hmm. I want to level set with where things actually stand, though. Put sort of the tweets and the predictions aside, because the head of the International Energy Agency said today that the global economy still faces a major threat from this war. The CEO of Chevron said the impact of the war has not even been fully priced into the oil market yet, and we know the Strait of Hormuz is still effectively closed, with the U.S. Maritime Trade Operations Center warning yesterday that the threat for shipping is still at a critically high level. So, Justin, Trump's announcement could paint a rosy picture. There may be better days ahead. Let's hope and pray there are. But are we any closer to being out of the woods?
At some deep level, no. Let me give you an analogy here, which I think it feels like we're following a similar path. We had the trade war. The president thought he'd beat up the Chinese and all of a sudden discovered that we had a unique vulnerability, that the Chinese had rare earth minerals that we needed. The Chinese probably knew that all along, and that put a brake on the president believing that the United States was holding all the cards. Well, the one thing that the past couple of weeks has made clear is Iran holds a lot of cards with the Strait of Hormuz. They may or may not open shipping, but its understanding and the world's understanding of that vulnerability now is, it's wide open for all of us to see. No one's widening the Strait of Hormuz, so therefore that vulnerability remains pretty much forever.
Steph, to your last point, the underlying economy is strong, but almost 40% of the total market cap of the S&P is just a small handful of firms, right? We talk about the Magnificent Seven all the time, and the war in Iran is making the market especially jittery. How concerning is that?
Well, we've had a very concentrated market for the last 3 years. We grew last year, the S&P was up 18%, the year before that up 24%, and the year before that up 23%. By the way, that's totally not normal. The average long term is 7.7%. So we've had some good years, but the majority of the gains, to your point, were Mag 7, technology, and communication services. Those together are almost 35% weighting in the S&P 500. So if you had those right, and you were involved in those, you did pretty well. If you took a more diversified stance in owning, a basket of the S&P 500 stocks at large, you wouldn't have done as well. But I think over time, you do want to have diversification. The reason those stocks and those sectors did well, though, Stephanie, is because these companies were free cash flow machines with huge moats, limited competition, and they're actually investing to spend all this capex. I mean, the Mag 7 are going to spend $761 billion.
So I'm going to interrupt you. We don't have a capex audience, so just remember our audience. We don't have professional investors watching this show. So let's leave that over here. But with all the uncertainty in the United States and the global economy, everybody is saying if they do have some money to invest, where should they put it? You are about to participate in CNBC's live Women of Wealth event. What is your message to those attendees?
Yeah, I'm really excited for the Wealth for Women event. We know over the next 20 to 25 years, you're going to see massive wealth transfer of $1 trillion to women and the next generation group. And women have come a long way. They have gone to college and higher education, but we still only really have a small amount of women that are doing their own investments, and they're going to have to learn. And so 5 of my colleagues from CNBC, we're going to get together. We're going to have 4 different salons, 4 different rooms with small groups and we're going to talk about investments and ideas and that sort of thing so that they can ask questions and then they can be with each other and ask questions. Because that's the number one thing I get when I visit with clients is I have a dumb question. There are no dumb questions. And I think that there's a lot that they can learn. So we're really very excited and very thankful to CNBC for doing this with us.